What's up, everybody? What's going on, Bosque's FX family? I hope you guys are all doing good, and welcome back to Bosque's FX YouTube channel. We do appreciate you guys to have you back once again here as well. We would like to thank you all who just subscribed to our YouTube channel. If you have not yet done so, please kindly hit the subscribe bell and turn on the notification icon so that you will not miss out any new concept from this channel. So guys, in today's video I'm going to share with you the masterclass on how to understand supply and demand. So what you have to do, you just have to watch this video until to the end. As well, if you are also new here, we also talk about smart money concept, ICT concept, and order block strategies. If you are looking forward to learn about those concepts, you are most welcome to join the family. So guys, as you can see on our chart here, we have Nasdaq, and this is our monthly time frame. So what you have to understand, right, whenever price is going to the upside, right, they create what we call a bullish trend, and then they will also create the opposite candlesticks, which are bearish candlestick, right? And then whenever price is going to the downside, they'll create what we call a bearish trend, and also they can create what we call a bullish opposite candlestick while the price is going to the downside. So what you have to understand, these bullish candlesticks, there are supply zone areas, right? And as well, these bearish candlesticks, they are our demand zone areas. That's where we look for the price to come and reject going to the what, to the upside, right? And if the price fails to do that, the price will still continue going to the downside, also creating those bullish opposite candlesticks, which are our supply zone area. So what you have to understand, right, as you can see, let's say right here, let me just give you an example. Let's say the price is going to the upside, right? They'll create those opposite candlesticks, something like this, right? And then these zones will be our demand zone areas. That's where we look forward to see price turning, going where, to the down, to the upside, to the upside, right? They'll have to come and reject to these demands going to the what, to the upside. But if price fails to do that, they'll go away to the downside. So let's say this is our demand, and then the price will come and break this demand, but also coming to test this demand, and then the price have to come back. So what you have to understand, right, if price comes back, right, from this demand, it have to go and break this zone, right? If this demand is a valid what, demand. But if price fails to go up or to continue going up, they will come and respect the breaker block, right? Because remember, this was a demand zone area. So sometimes the price will come and fill the orders which they failed to fill on this zone area. So they'll go away to the downside, something like this. And once it comes back down, you have to understand they'll give you a breakout structure again, right? They'll continue giving you those breakout structure, meaning they'll take out this demand. So this demand will not be a valid demand, right? So the price will come again and test this one, and then they'll reject, right? For you to see this demand is a valid demand, you want to see price giving you something like this, going to the what, to the upside, right? But if it fails to do that, they'll come to this breaker block, and then they'll continue going to the downside. So what you have to understand, right, these demand levels will help us to understand if price is still continue going to the downside, or is now going to the upside. So let's say in this example right here on a real chart, as you can see, right, let me just put a replay mode at this momentum right here, guys. So what you have to understand, remember what I have said, these opposite candlesticks will be our demand zone areas, meaning here, guys, if we go in smaller time frame like weekly, we can see that okay, in weekly time frame we did have a break of structure, right? We did have a break of structure right here. As you can see, this is a break of structure, and then the price came back, taking out the last what, the last higher low, giving us a change of character, something like this, right? Something like this, right? So as you can see here, guys, at the top we did also have this break of structure and change of character, right? And also we did have a bullish engulfing candlestick right here, which was our demand, but the price fails to continue going to the upside, and then they took out the zone. That's why the price have given us this opposite candlestick, right? Testing this zone, the breaker block level right here, guys, the breaker block level. So this is a breaker block level right here, whereby the price came back to test, right? So this is the what, the zone right here, something like this. So they just came back to tap on breaker block, and then they went way to the downside now, as you can see. And as well now, guys, as you can see, this was our demand zone area. So the reason why the price didn't respect this what, this breaker block, is because of this last opposite candlestick, right? So this last opposite candlestick will now become our what, our supply level, meaning at this bullish candlestick we have a supply level which can hold the price to go to the downside. But as well, guys, as you can see, we did have a break of what, break of structure, something like this. So if you go in your monthly time frame, you can see that we did have this opposite candlestick, which is our demand zone level, this demand zone level right here. So if you go back to your weekly, it will be something like this now. So the price just came back to tap in to this breaker block right here. I'm gonna show you just now. As you can see, this was the last what, the last candlestick of a sell going down, meaning this was our supply level. So this supply, it fails to hold the orders, it fails to hold the orders. That's why the price rejected. So this zone, we call it a breaker what, a breaker block. So for you, you'll be waiting to see if price comes and respect this what, this demand right here. So this was a breaker block, and this breaker block, let's see if it hold the price. As you can see, the price was being able to hold until to this what, to this supply, and then the price went down, meaning now the price is now at the what, at the supply level, at the demand, sorry, at the demand level, as you can see. So if you can see now, you can see the price have rejected to this demand, right? So for you to say the price is now going up, you want to see price taking out this zone, right? But remember, this is a demand zone area. But if price fails to take out this zone, this low will now become a weak what, a weak low. It's possible for price to come back and take it out. So what you have to understand, this will now become our supply level, right? If price fails to take it out, and as you can see, the price first fails to take out this zone right here, but they respected the what, the supply. As you can see, now the price started going to the downside, meaning now, guys, as you can see, this will now become our what, our failed demand zone area. But now we have a break of what, break of structure. Now we have a break of structure, meaning now we'll be focusing on this breaker block level right here, guys. As you can see, we have a breaker block level right here, which is our what, which is our breaker level right here. We also have a demand level right here. So if we go back to our to our monthly time frame, it will be something like this, guys, as you can see. So this means that if price fails to hold, this zone will be also being taken out. So this will be the next demand level, which you now keep an eye to see if price can hold the price. And now if we put our replay mode, as you can see, the price came back to tap in the breaker block. As you can see, now they pushed down the market, and now they have respected this demand level right here, guys. Let's see. As you can see, let's go back to our to our weekly time frame. So this is our this is our weekly demand level, because you can see that clearly we did have a break of structure right here. So this was our weekly demand zone area, which was never being mitigated right there, and this is our our breaker block level, sorry, breaker block level. So now, as you can see, the price fails to come back to the breaker block. Now they have rejected to a demand right there, as you can see, guys, right? And this demand was able to hold the price now. So the reason why the price took out this zone right here, guys, is because this zone was created after this break of break of structure, and then the price came back to tap into a demand zone level right here. So they will now give you what we call a change of character. But remember, if price fails to go to the upside, this means that this breaker block will be able to hold the orders, and this now became a weak low right there, as you can see. So as you can see, price rejected. So if we go to a daily time frame now, I'm gonna show you something, right? So in our daily time frame, it's something like this, guys. As you can see, this is our this is our break of structure right here, guys. We also have our failed demand zone here, and the reason why the price didn't respect this one is because it was being mitigated once before. So the price had to come back to this imbalance, or you can call a fair value gap. That's why the price respected this zone and then shifted the market going to the downside right there, as you can see. So if we go back to our weekly time frame, it will be something like this. As you can see, they are not even above our breaker block level right there, and the price was able to hold the price to go to the downside. Now as you can see, price managed to also take out this zone, meaning now we are going to be focusing on this this last drop, best drop, which is your your supply level. And the reason for you to wait here is because that the price give us a change of character, but this zone, it fails to hold the orders because the price was coming from a breaker block, and then the price turned. So when price turned going to the downside, they also took out the low, right? So now you're waiting for the price to take out this this demand right there. And then if you go back to your monthly time frame, the market structure is now like this. Now you're now waiting to see what will price do once they come back to this last opposite candlestick, which is at this zone right here. But remember, we also have a breaker block in our weekly time frame. You can see we did have a breaker structure here, and this was our supply level. So it's our breaker block. So it's possible for price now to come back to this zone now, to come back to this zone before they come back to this supply, and then they can come to this demand zone level right there, something like this. Because now it will now be clear that you can see that the price is giving you clean swing structures, right? It's now giving you clean swing structures. Let me show you guys. Sorry about that. Let me delete this. Okay, so it's giving you clean market structure. As you can see, swing high, swing low, swing high, swing low, swing high, and then you are expecting a new swing low, and then the price will give you another swing high, then swing low. So that's how the market structure will be looking like, and also that's how you use supply and demand in the market, right? You have to wait and see what the price will be doing to those previous last opposite candlestick. They will help you to understand everything in the market, right? They will help you to understand. So you just have to understand that we have two patterns which we look for, right? So let's say the price have given you a rally, base rally. This means that we have a break of structure, right? Break of structure right here. And then if price continue going up, right, something like this, they'll come and respect this breaker block, and then they'll go up. And then whenever they come back, right, they'll come back to the what, to the actual demand zone, and give you a nice change of character, then continue going where, to the upside. So this happens if the market give you a immediately pull back, coming back to take out what, a zone which we call a breaker block, and then they'll come back to the actual what, to the actual demand zone area, respecting this demand, and then they'll continue going where, to the upside. So I hope this video, guys, will help you, and I hope you understand this concept. You just have to go through over the pairs using the same strategy which I just showed you. You have a blessed day, guys.